Good morning. Ira Epstein of Linn Associates with your morning flash update for this Friday, the 8th of March, 2019. The time about 9:20 a.m. Central Standard Time. And as you can see, a down day in all the stock indices. We did not have good jobs data. We only added 20,000 jobs. The market was looking for 180,000. And then in the other arena with China, imports and exports, huge misses. I'll show you what that did. Gold up sharply today off concerns as the dollar slips back, but China also said they bought 10 million, not 10 million, they bought 10 tons of gold in the last period. That's quite a bit of gold that they're buying. In the grain market at 11 o'clock today, we get the USDA supply demand report and the world numbers as well. And this will be important because it gives us an idea from those numbers as to what is going on, supply demand around the world, and what our farmers might be considering as the planting season is upon us. If you look at the bonds and the notes, you had a big rally off the shock of the jobs data. You got up to 146.6. You have slipped back quite a bit from there. Same thing happened in the 10-year notes as it came down 9, and obviously seeing these numbers, poor numbers coming in out of China, that had an immediate impact right off the bat on all of the energy markets. So as I said, the data today interesting. Let's first start away from that with good numbers. The U.S. housing starts, they came in up 18% to 1.23 million units. They expected up 9.5, so that's double what they were looking for. Building permits up 1.4%. They expected a decline of 2.7%, and housing starts revised were even worse in December to a negative 14 from an 11.2. So we're suddenly seeing January numbers did give us a pop. The U.S. monthly non-farm payroll data, the headline, 20,000 jobs versus an expected 180. The good news is the way that it comes in and people go out of the workforce, your unemployment rate slipped to 3.8%. So that looks pretty good. Government payrolls did fall 5,000. The participation rate about where it was. The average hourly earnings popped a little bit. That is all good work. News as well, and non-farm payrolls in January revised a little bit higher actually. So what is this one-off number? That's going to be what everybody has to ask themselves. It certainly is a cause. It could be a fluke. That's what Larry Kudlow said today. Could be a fluke. You'll know in March. If we see another number like this, then something else is going on. Here's something that dampened the market and probably affected the energy and stocks. On Friday, which is today, our ambassador to China, Terry Branstad, said that he does not see preparations underway for a final trade agreement with China. That's problematic. We keep hearing they're getting closer, but here's the ambassador telling you that both sides need to close the gaps. Chinese exports, I said, down 20.7% from a year earlier versus expectations of a 6% drop. That's 3 times as bad as it was. Imports 50% worse at 5.2% decline versus 2.5%. China's going to import a little bit more soybeans. That's what they're telling you right here. And the People's Bank of China, well, they increased their gold reserves for a third month. Now they added another 10 tons to that. So that is going to help the marketplace if you're a metals trader and you like to look and see what those things are doing. You know, one of the things I like to do if I can get to the area that I want to be here, it doesn't look like I can. Ah, there it is. My morning subscriber video. Let me explain what this is over the weekend if you're looking at this. Think of it this way. You have an idea on a trade. You're wondering, do I like that? It could be in the gold. It could be in a grain. You don't know. I cover 40 charts. And what I've been adding now is I'm slowly adding your ETFs to it. So I'm adding the ETFs, I'm doing the QQQ already. So I'm bringing on today, bringing another energy chart for you, especially in the energies. You're going to start watching how these spiders and all work. Because to me, at the end of the day, as much as I cover all these, I realize that ETFs are popular. So I'm popping a few of them in there. In addition, I'm not dropping one thing, I'm adding a chart here and a chart there. And on each of them, because a chart to me is a chart, I'll tell you what I see as the action, what I would expect the pros are doing. I'm going to give you the technical and fundamental analysis, and I'll give you day trade, position trade, crazy ideas that I'm seeing going on in the marketplace where I think the pros are putting on, taking off their positions. So you're sitting there and you're wondering, should I do something? You call your neighbor. I doubt that you're doing that. But if you look at it this way, here you come in the morning, I start recording at 8:30. That's when the stock market opens. And remember, I'm Central Time in Chicago. That's when U.S. stock markets open, the meats are opening, the grains have reopened, a lot of the option pits are reopening. You get that all. The first 30 days, $7.95. After that, we have monthly or yearly subscriptions to it, and away you go. I almost said prescription. That's not what it is. Give us a call. You can go to our website, and on our website, go under Research or Education, sign up for it there, and you can click here. Another thing I'm doing, folks, if you're still here listening, I'm starting to publish all the special reports I talked about. We finished yesterday getting everything ready for my videos. I'm actually going to start today with the first one, and instead of writing, I'm going to make short vignettes, video vignettes, where it's easier to look at, easier to see the charts. You can go back, play it, stop it, pause, look at the chart. I think that's so much better than writing. I'm Ira Epstein. You have a good day, and I'll see you with these reports later today. Have a great weekend.